Major funding for these broadcasts has been provided by grants from New York Community Bank, AmTrust Title Insurance Company, Perfect Building Maintenance, M&T Bank, Customers Bank, Marks Paneth LLP, Capital One Bank, Collins Building Services, Meridian Capital Group. Additional support has been provided by grants from AKA Hotel Residences Corman Communities, Ariel Property Advisors, Amarant Bank, Bank of America Merrill Lynch, Briarwood Organization, Chase Commercial Mortgage Lending, Chase Commercial Term Lending, Citizens Bank, Dime Community Bank, Douglaston Development Levine Builders, Flushing Bank, Friedman LLP, Handro Properties LLC, Handler Real Estate Organization, Hodges Ward Elliott INC, Investors Bank, James D. Kuhn Real Estate Institute at Syracuse University, John Casamatides Red Apple Group, Keysight Capital Partners, Matone Group, New Banks, Newmark Knight Frank, Ocean First Bank, Optimum Window Manufacturing Corp., People's United Bank, Rockefeller Group, Rosewood Realty Services, Stonehenge NYC, SVN CPEX Real Estate Services, Tierra CRG, the Meringer Family Foundation, and these friends. Oh, Crystal Apple, tell me how the investment sales business is going to be in 2020. Are you going to be bright or are you going to be dull? I don't know the answer, so I assembled this distinguished group of investment sales brokers, professionals, to talk about the market. My guests include Aaron Jungreis, Chairman and CEO of Rosewood Realty, Amit Doshi, Senior Executive Managing Director at Meridian Investment Sales, and last but definitely not least, the man that the other people call the Dean of Investment Sales, my friend Robert Knakal, who is the chairman of the New York Investment Sales for JLL. So how's the apple looking, Mr. Knakal?
Well, you know, the investment sales market has been challenged for 50 months now, Michael.
How many months?
50. October of 2015 is when we started to see the first cracks in the market. Since then, the volume of sales is down about 69% in the over $10 million sector. So it's been challenging from a volume perspective, no doubt about it.
Before the show, I was on the phone with one of the senior lenders of a major bank, talking to me about what's happening on the West Side with Amazon, with Facebook taking space, with Blackstone, all these people talking about the office market. So the office market seems okay. The retail market seems a little quiet. Residential rental market, everybody has an opinion.
I think Bob is correct. In October, I think it's just about $80 billion worth of investment sales property traded. That included all kinds of investment properties. I specialize for the last 30 years in the multifamily area only. I'm not saying that only. I've sold many, many sites from Upper East Side to the Lower East Side. But I personally think at the end of the day, the education of the market, especially with the new laws came in that destroyed the market. I think both my fellow members over here agree that in June 2019, the laws devastated everything. And that being said, something interesting happened in the last quarter and still continuing, and I think it'll happen next quarter also. The re-education of the sellers and the expectation of the buyers came to fruition very quickly. Call it social media, call it news media, however it is.
Look, the act of June 14th, which I call, definitely a changing effect on the residential rental market in New York and also New York State, has definitely had an effect. Are you saying that the buyers and sellers are totally cognizant today? Are they aware, or are they still expecting that this law is going to change within a year or 2 years?
the laws may not change so quickly, although landlords have filed lawsuits. I think that itself will take some time. But I think it's just the question of acceptance of the laws, maybe working through it, because I always believe in the ingenuity of the landlords, of the owners. They'll come up with a way to do something better going forward. Yes, it's what I call in a chess game, a complete checkmate by the city.
But you know what? As I was saying prior to the show in the green room, Bob has a large development site in Long Island City, which is going to sell for a reasonably high number in today's market, even high number in general in Long Island City. You've recently just sold a portfolio of buildings, a large building in Queens, okay?
That's right.
So sales are taking place. What's the pricing differential? How much has the price gone down?
I would say probably 30% in New York, but every submarket is different. I think the Bronx is probably about 35%. Manhattan, it's lower. I think it's more, and again, it's hard to say because Harlem and Washington Heights fall more into the Bronx category, but Manhattan south of 96th Street, West Village, maybe it's 10-20%. But recently in the West Village, there was a package that went for $600 a foot, and it would have gone for $1,000 a foot. So that's
right.
40%. And Brooklyn, which is mirroring Manhattan, parts of Brooklyn like Midwood and Sheepshead Bay and those areas, which used to have 15, 16 times multiples, because that's how they trade, are going for 10 multiples. That's almost 50%.
We were talking before also, Amit brought out the savings and loans in 1992 or 1994. Then you talked about the recession that took place, at the end of 2008, 2009, the beginning over there. We haven't had a recession. We've had some implementation of some legislation which has had this effect on the multifamily. But you know what? The real estate world has a lot of assets in it.
Yeah, Michael, I think what Aaron and Amit were discussing in terms of value is applicable to the multifamily market. Fact is that each sector of the market, each product type has performed very differently. Some have not been as adversely affected as others. I think from a macro perspective, the biggest thing that is of interest is that for these 50 months that the investment sales market here has been in correction mode, the broader economy in the United States and in New York City has been doing great.
Right.
GDP growth is strong, wages are growing, jobs are growing, consumer confidence, consumer spending are up. All of these metrics in the broader economy are great. So it's really puzzling why the New York City investment sales market has decoupled. And even before policy changes have affected things, the market was slowing down before then. I mean, most recently with the multifamily rent regulation reform, that's impacted that sector of the market very significantly.
Let's talk about mixed use, because all of you sell mixed use properties with retail downstairs, okay, and upstairs multifamily apartments. How are you seeing that?
I think the bigger savior for this market, especially for landlords and investors, is the interest rates going down, okay? The emphasis that we had a value add situation, I think the value add word has become non-existent. Everything has become like a core asset.
What's happened to the value add buyers, okay, who came into the market, okay, like the Icons and, the Sugar Hills and the Madison and all these other buyers who came in for the idea that they were going to take the property, upgrade it, get rid of some tenants over there. Where are you seeing them? Are they bailing out? Are they selling properties today? Are they staying in, or are they calling their investors and saying, give us some more capital because we need this to run the properties?
Well, if your business plan was to hope to get a promote, you're basically out of business. So we've seen a lot of folks who historically have just bought multifamily assets now looking at office buildings. That's why, one of the bright spots in the market are the value add Class B, C, and D office buildings. And interestingly, we're selling a building on West 22nd Street now that, typically if we get 100 or 125 confidentiality agreements signed, that's great activity. 242 CAs signed on that deal, and a majority of those people who are looking at it are people that never bought an office building before. And it's because they've had to change their business plan
but the
based
change
on
your
the
business
market.
plan is interesting, but there's a big difference in operating an office as opposed to a multifamily.
Yeah, so multifamily is very different. Let's say there were 100 buyers out there. Now it's gone down to 20 buyers. But thank God those 20 buyers are real buyers. So if you look at my recent contract signing, and there have been probably about 10 or 11 of them since the rent laws kind of collapsed the market, I really think that some of the same players are buying again. Maybe they were waiting on the sidelines. So this question that you have can be sort of, the old families or the old money are basically taking out more finance money, sitting on the sidelines. It's a gestation period. They need to digest the laws. They need to come through with it, and then maybe they'll come to enter the market. But I don't think, Aaron, you may agree, it's not going to be until Q3 of next year.
I'll tell you what bothers me more than anything, though. Most of these guys are going out of town. And as a New Yorker, and as a broker, and as someone who owns property, and as someone who loves New York more than anything in the world, that bothers me more, that these guys who've worked hard, made a lot of money, are taking it and going to Atlanta. And they're going to Orlando, they're going to Jacksonville, Tampa.
Let's also look at the tax effect, what has had happened in New York. Because
Transfer taxes.
The transfer taxes are down because the sales are down. Then you talk about the discussion of the commercial rent tax, commercial rent regulations on small offices, small retail. It's not an investor-friendly city anymore, right?
Michael, it's the biggest or the most frequent question or favor I'm asked by clients today is they call up and, as Aaron said, they're saying, hey, I'm buying a building in Nashville or in Tallahassee or Austin. The brokers don't know me down there. Could you call them and tell them who I am? While I'm happy to do that favor for the client, I hate making those calls because the capital is leaving New York. And more owners who have been here for decades are looking outside the city.
So how do you protect New York City with investors to continue to come here?
I'm actually all positive on the multifamily market. I'm going to live and die with it. And I basically told my clients, you can go out of town, hear me out, you can go out of town, you're going to get your cap rates, no questions asked, but you're not going to get the appreciation.
Right, but let's also be realistic. You know, students graduate college. They want to come here. You know, foreigners come here. This is the land of milk and honey, okay? This is the place that people want to be at. We have a limited number of apartments. We need to build more apartments, okay? That's why development sites like you're talking about in Long Island City, or even development sites in Manhattan and the Bronx, are selling, okay? Because the housing is a requirement, okay? Now, some of the problems are, fine, if you don't have fair market value, you're living with a certain number. You're also living with a limited MCI increase that you can get. I think there's going to be an adjustment. People are going to continue to buy. They may continue to buy with less of an expectation of what they'll expect to get.
The existing stock is going to be frozen by the new rent regulation reforms, and if we go to universal rent control, it's going to impact free market apartments. We need new construction. And so, very simple fix. Have the state waive the 12 FAR cap on residential, double the FARs if you're going to build a rental building, put a deed restriction saying you can't convert that building, put a cap per square foot on what the real estate taxes can go to. That will still give the city more real estate tax revenue per parcel and an economic system that works. And you have to put a covenant in that particular building's deed saying no matter what happens on a state or city level, that those units will never be subject to rent regulation of any kind.
Let's look at what's happening. I don't know how much you're involved with the sales of hotels. Right now, the new rules going into effect that you have to go for a community purpose to get approved before a hotel. I mean, that's why the city has 40% increase in number of rooms over the past 10 years to take care of the visitors. 67 million visitors to New York. You need a place for them. That's now right. We're going to limit the number of hotels because they want to have regulations to help the union and other people?
So, Michael, I got to make this point because Bob mentioned everything correctly. I think the rent stabilization in probably 2017-18 census was roughly 945 million in that sense. I'm sorry, 945,000, and about 900 the deregulated apartments were just about the same. And I think the public housing was only 9%. So I would love to talk to the city officials and say out there, why not increase the public housing fund rather than penalizing the landlords? Why take away certain basic rights that we bought the properties for and increase your public housing? Maybe invite the private sector to come in here and start building on it.
Look, you know, I'm not sure if any of you are selling the NYCHA property. On some of these properties over there, you have these garages. People don't need garages anymore, okay? Certain of these properties should be taken over and utilize that area for housing, okay? Even if you change the zoning a little bit. It's very important over there.
Michael, there's a ton of excess property that the city owns. With the right incentives, the private sector will do anything you want them to do. It's the incentive packages that have been available are not enough to stimulate the number of units that we need.
Right.
It's that simple.
Absolutely.
In fact, there are guys who I've spoken to, many landlords, they're trying to get Article 11s passed in their buildings. The city is not friendly at all to them.
Explain to my audience what an Article
Well, Article 11 is you basically tell the city, hey, look, I have this building. I'm going to give me the taxes capped at, let's say, 10%
Right,
of
I'll
the
keep it
rental.
for 40
I'm going to
years.
keep for 40 years the property's in stabilization. It's good for the landlord because now his taxes are low. It's good for the city because tenants are going to be in stabilization for the next 40 years. And guys have red tape. The city won't get it done for them. It was happening in 17, 18, not anymore.
But what's happening, like in Jersey City, Gothenburg, Union City, and Long Island? What are you seeing with regard to the investment sales there?
We actually did a deal recently in Jersey City. We have a few more that we're selling in Jersey City. I'm not really in Gothenburg and those other towns.
Nassau is not that great because the taxes are so high.
Taxes.
But when you talk about Jersey City, the quality of living, I mean, look at it. You can literally look at New York City. What beautiful site can you have? Besides that, the housing stock is much better in Jersey City. There's definitely better incentives by the local officials and government. And I think that's Jersey City is going to become a place to go to. No question.
Bob, you have any involvement in New Jersey these
There's
days?
something west of the Hudson? I didn't hear about that.
You don't know what you
No, I just have 99% of my work is done in.
I mean, look, there's a lot of development taking place in New Rochelle and Yonkers, okay? The Bronx is right next to Yonkers. I remember some major developers buying
Sure.
a lot of property over there. What's your thoughts about what's going on in that market? I know that you visit it once in a while.
Look, clearly, people need to look outside the city for opportunity. If you're trying to get outsized returns or even reasonable returns, it's still challenging to find it in the city. So market participants are increasing their geographic focus, and there are some great opportunities outside the city.
In the same manner as when I have developers on the show and I talk about developers, so how are you adapting and what are you doing to change the market today in your own way running of a business that you didn't do before due to the changes in regulations, due to the other regulations that are taking effect?
I'm selling development sites. I'm going out of town. We're actually doing deals out of town. We're trying to sell office buildings, but that's hard to break into. And then we're just doing the same Bronx, Manhattan, Brooklyn multifamily.
Amit?
Generally speaking, I'm not losing my focus on the multifamily, so Aaron is correct. I've also started doing, just today we signed a contract in Albany, New York, and I think just being Meridian being available in 49 states, I'm getting that opportunity now to broker out-of-town deals or understand the markets much better. And I think the bottom line is we've all survived, especially
That's exactly what I'm
our
saying.
group.
I'm saying, my comment, and I say this with regard to my other show, the Life Story Show in Building New York, I have an acronym called SALT, and one of the letters is A. You have to be adaptable, okay? And you have to literally take the adaptability. T, you're all tenacious, okay?
Yes.
S, you seize the opportunity, and then you need a little luck, which is the L. So that's the
Nice.
SALT. Nice acronym.
I always say we brokers have stayed nimble and we have adapted the market. Bob, I applaud you because you were one of the first ones to go to Hudson Yards when I didn't even know that Hudson Yard something could be done over there.
You know what? I think you bring up an interesting point. Let's talk about Hudson Yards.
Sure.
Okay. You have the Related over there. You have some other developments. Tishman Speyer just bought a building, on 30th and 9th Avenue. Then you have the post office property, and then you have the other properties from 36 to 42nd.
What about Facebook's major lease?
No, I'm talking, but that's
Yeah,
Facebook's
sure.
major lease in Hudson Yards. Do you see new developments, especially since your development sites, being sold in Hudson Yards now?
Well, there's actually been very few development sites sold in the yards in the last couple of years.
I know.
Up to that point, there was a ton. I mean, we've done, I think, 17 sites, major sites in Hudson Yards, and that's been a big part of our practice, the land practice. But now there are a few sites that developers purchased that are not, they are not going to develop, that may be put on the market for sale. But the interest over there has been tremendous, and it's remarkable. If you go over there, walk around,
It's
as we all
fantastic.
have, it's just really amazing
Now,
what's going on.
There was a change in zoning in Harlem. Okay, what are you seeing with East Harlem and West Harlem today?
I think East Harlem is still going to be the step cousin or the stepchild of the gentrification. I see things happening much better. I think the West Harlem section, what I would really call it, the upper West Side, and I just don't see, and I hope nobody is out there going to kill me on this, but I just don't see the East Harlem. The older building stock is not that gentrified. The newer buildings are coming up, but again, Bob, I could be wrong. Maybe Gary Barnett's site on, will spur more activities.
Now, what about your thoughts about the Inwood market? There's a lot of talk about the Inwood and Washington Heights market. Aaron?
So Inwood is definitely undergoing a change. There was just that recent deal that sold on Broadway and Sherman, that huge tower that Arden is putting up, 300,000 square feet. Taconic is building over there. But Inwood trains are still, a lot of the buildings are far from the train, so Inwood has a slow growth potential, in my opinion, right now. Not like Washington Heights.
Exactly. Washington Heights, when we talk to buyers also, they are more desirous of Harlem first, and then they're going to go to Washington Heights. And then again, I'm selling something right now, again, going back to rent stabilized markets, 33% prices are down. I know Aaron mentioned 30%. I'm seeing up to 40% price adjustments for multifamily rent stabilized products.
We do have 5 boroughs, and sometimes people forget about the 5th borough. The wheel didn't happen. The outlet center did happen, okay? What's your thoughts about Staten Island? Do you think things are going to improve in Staten Island? I know of a couple of shopping centers that have been up for sale in Staten Island, but some of the buyers say, it's an isolated place. $17 toll to get over, and the ferry is there for. Bob?
Well,
do you know where Staten Island?
Yes, I
no, because you said you didn't know where Jersey.
Exactly right. He did say that.
It's on the way to Jersey.
We did a number of loan sales during the Great Recession out in Staten Island. Since then, we haven't really done a lot.
Amit?
My humble feeling is, we're going to go back to policy. This is where the policymakers are going wrong again, and Staten Island is a great example. Instead of decreasing the tolls, bringing them to nothing, they've increased the tolls. So who would want to live there? Even if you're a resident of Staten Island, you're still paying a substantial amount of money. And to get back and forth from them is not so easy. So I think this is where Staten Island certainly has a potential, a lot of waterfront. You go in any part of the world, people are rushing first to the waterfront rather than rushing away from the waterfront.
Thinking about that, how are we seeing the Greenpoint neighborhood, the Bushwick, those neighborhoods which were emerging, gentrified, and so on? What do you?
They're still emerging. People are building. We have a few pending sales in that area, and because there's so many new developments, I don't see that slowing down at all. It's becoming more and more like Manhattan every day.
So I got to make a different kind of a comment over here. After the rent laws got kicked in, I think it's more not like location, but more like cap rate. So I think that is sort of whether you buy in Brooklyn or you buy in certain parts. Yes, I agree. Year of construction matters. How's the building kept matters. No capex needed matters. How's the paperwork matters, especially in rent stabilized stuff. But I think people are now looking at saying whether I buy in Greenpoint or I buy in this. Unless something changes dramatically, and I could be wrong. I could be wrong.
There are very few pre-war buildings, though, in Greenpoint and Bushwick. Right. So most of the sales are new construction.
No, but I think it's a great point, though, Michael. I have to tack on to what you said, Amit. Cap rate is so important today. If you price a transaction with the right cap rate, you're going to have a flood of activity, a flood of people looking at it. If you're trying to get 2016 pricing today, that setup goes right in the garbage can.
No one wants to look at upside.
If you want to get activity, you have to be at a yield today, an asking yield that's compelling. And you'll have a ton of activity. But if you're too aggressive, it's tough to find
What's your thoughts about my friend John Catsimatidis, has built 2 buildings in Coney Island, okay? Coney Island and East New York. Any thoughts about that?
No, Coney Island is the train issue. It's far, even though they have the ferry. But I think because he's building such a unique structure, that Coney Island itself is undergoing such a huge change just because of what he's putting in there. East New York, it's too early to tell. I know East New York has better transportation, but East New York still has a lot of housing projects. And I think East New York still has a lot of time.
I think that Coney Island has a lot of things going for it. There's some infrastructure issues that need to be worked on, but there's so many attractive things about Coney Island.
What about
Jamaica?
We'll
see bigger activity. And Jamaica, people have always said to me, where's the opportunity to buy? The opportunity to buy outside Manhattan is near transportation hubs. Jamaica is one of the best transportation hubs in the country. And so I think with the proper changes in zoning, Jamaica could be unbelievable.
What about Flushing?
I mean, Flushing is a melting pot. There's no questions asked. We are about to handle a project down there, and I think that stuff sells, no questions asked. Tremendous amount of activity is already there in terms of older housing stock. The newer land, I think it's all going to get rezoned, and it's all going to be great.
Flushing is almost like Borough Park. It's impervious to the market.
Speaking
Very
about
ethnic.
Borough Park, you brought up the comment, what's happening in Borough Park?
There aren't many building sales going on.
Right.
Because people who bought these properties years ago, they're family assets, they don't need to sell, and they're not going to sell it unless it's a 3 cap. So there's very few sales going on in Borough Park. But the housing market in Borough Park is exploding. It's going out into Bensonhurst, it's going out into Sunset Park, leaking into Flatbush.
The Gowanus, what's your thoughts?
We're selling a big site in Gowanus now, and the interest has been remarkable. People, I think, are looking at that as an area of the future.
I mean,
And all the
Gowanus
different
has
uses,
reasonable-
retail, residential.
Has good transportation also. The Gowanus is pretty good. You know, it's a great opportunity. So, Crystal Apple, you're reasonably bright, okay? You're not shiny, but you're bright, and people are going to adapt and adjust, and I think the market will continue to sell. We love New York, and people want to love New York. I'd like to thank Aaron, Amit, and Bob, and I'll see you next week.